Finance, a la Shmup. What are the 5 principles of finance? Well, easiest way to remember these bad boys, look at your hand. We're just going to take them finger by finger. Your thumb, the time value of money. The mantra, $1 today is worth more than $1 tomorrow. Why? Well, because you can, in theory, always invest $1 and get a positive financial return from that investment, almost guaranteed. Well, you could play it safe, investing in low-yield American Treasury bills, or you could show a bit more gamble by investing that same money into a somewhat riskier index fund of bonds or stocks. Either way, here's the magic formula. Take the dollar amount you invested and multiply it by 1 plus the rate of return to the power of years. So yeah, you want to be making your money work for you. If you invest it, it collects interest or returns profits. Keep it under your mattress, and about the only thing it's going to collect are bed bugs. Okay, second principle, second finger. Risk and reward are related. Kissing cousins. Yeah, so they can't get married. Shame. They look like such a cute couple. Okay, so here's a question. Why do you get 8% returns from the stock market in equities and you only get 3% from safe T-bills? Well, a bunch of things affect rates of investment return, but the biggest issue revolves around whether you'll get your money back and or a positive multiple of your money back when you're done. Check out bond performance over time. Steadily onward and upward, but nobody's becoming spectacularly rich off of them. Stocks, on the other hand, well, you might make a fortune, but you also might have to stomach some extreme lows along the way. You're basically putting your money on a virtual roller coaster and hoping it survives the experience, but hey, no risk, no reward. Over time, the stock market has a whole lot of reward. All right, third principle, middle finger. Hey, watch where you point that thing. The market as a popularity contest versus a weighing machine. Thank you, Warren Buffett. What does this mean? Well, there's short-term versus long-term thinking when it comes to investing. You want to be long-term greedy because hopefully, well, you're going to be here for a while on Earth. Invest in a company like Google early in its history and you're going to be set for life. Same deal with Amazon, Facebook, and those guys. Invest instead in a crappy company called Fidget Spinner Mania. Who knows what your fortune's going to do? It's risky. You might go from $10 to $12 in a week, but only wake up 6 months later when it's trading at 12 cents a share. Yeah, you want to avoid fads, duh. And yeah, it's not that easy to spot the early signs of the next Google, but well, that should be your goal. All right, principle number 4, your ring finger. Cash is king. Well, the dog toy company Bite Me, I Squeak, yeah, that's the name of it, might show $1 million in profit, but you don't know how they've expensed their plastic molding machine. What clever maneuvers they've used to pay minimal taxes? Well, the only way to fairly evaluate the value of a company is to follow the cash and look through accounting tricks which can change the bottom line earnings in a whole lot of different ways. All right, moving quickly on, and finally, your pinky finger, agency problems. Well, you might be picturing this guy in a slick suit in a Hollywood office selling clients' time into a studio system with "let's do lunch," a regular catchphrase. Well, yeah, it's basically the same thing in finance. A client hires an agent and a relationship structure is formed. That is, there are legal requirements around the behavior of that agent. Specifically, the agent has to look out for the best interests of his client and he has to put his own best interests on the back burner. Well, this structure is a really big deal in the financial world because so many poor, unsuspecting people have been screwed over in the process of big city slickers taking their dough with no comeuppance. Those fast-talking grifters are really deserving of a, knuckle sandwich. Yeah, put all 5 of those fingers to good use if that ever happens to you.